On monetary policy aspect, how well has it also contributed positively to the conducive business environment in Indonesia? Because contrary to what we consensus before, BI, Bank Indonesia lowered its main interest rate, 3.75%.
Yeah.
Is it also something you anticipated?
Well, it was a little bit of a surprise to us, the last rate cut, but inflation in Indonesia remains very low at just 1.4%, and we don't see a significant pickup in inflation in the coming year. So the low inflation gives Bank Indonesia room. We know Bank Indonesia is very concerned about the external balance of payments and the currency. And we think they took advantage of the positive global sentiment and the stability of the rupiah that's been entrenched for the last month or so. They took advantage of that environment for another rate cut. The important thing from our own perspective as we look at monetary policy is Bank Indonesia has been really at the forefront among emerging markets in adopting unconventional policies. Not just quantitative easing, but the debt monetization and the interest burden sharing agreement, which was an exceptional agreement this year. Indonesia has built up, and Bank Indonesia in particular, a very strong policy track record over the last couple of years in sound monetary management. And they're going to need to convince investors that they're not losing a grip on that hard-won policy credibility. If they continue to resort in the coming year to bond purchases in the primary market or a renewed form of interest burden arrangement with the government, that could undermine sentiment and create headaches down the road for currency and inflation management. So that's something we're going to be watching in the year ahead.